Bitcoin hits another all-time high above 70k as ETF inflows and MicroStrategy just keep buying. Implied vols spike on the rally and that triggers some call option profit taking. And Ethereum skew fades as call spreads get bought in size and put buying comes in, signaling some potential risk ahead. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. As always, I've got Dave Brickell here from FRNT, and we've got another special guest in the studio, Chantal Bradford, Head of Institutional Sales at Deribit. How you doing?
Yeah, good, thanks. Great to be here. I think you guys have been trying to get me on for a while, so it's great to be here. And
well, we needed someone from our sponsors on, right?
Yeah.
Well, it's good to say. I kind of feel it's just deja vu every week in terms of market wise and like what's going on and what's sort of driving things. So it's good to break things up and really excited to hear about what's going on at Deribit and some of the new developments there as well. So
yeah, exactly. Because the whole point of this podcast is just show people about the options space in crypto, and Deribit are launching all sorts of new stuff. So we kind of want to hear it from the horse's mouth, what's going on there, so everyone can know what they can trade. I mean, I'm excited about the Solana options, right? That's the thing I've been banging on about for the last few weeks. But do you want to tell us a bit about that? Like, you might as well start there, right?
Yeah, cool.
Yeah, I think so. Went live yesterday, so launched yesterday morning. Went well. I think obviously, like you're right, like now's a really great time to launch them, given what's going on in the market. I think there's a lot of interest in alts at the moment. And then launched MATIC and XRP today. So again, we have some market makers quoting. We've had a few trades go through, and a lot of interest so far.
Nice.
Yeah, I didn't realise that. I only thought it was Solana. So there's more.
And they're linear, right? So they're a bit different to the Bitcoin and ETH options that have been historically on Deribit. So should we talk a bit about the differences?
Yeah, we're cool. I think we've settled on altcoin options. So yeah, linear options. So at the moment, BTC and ETH is inverse, which means you use your BTC or ETH as the underlying currency. And with like altcoins or linear, it's going to be USDC settled. So going forward, we've got these three coins that we've launched so far, but everything going forward will be USDC settled. And I think, depending on how these first three go, the plan is to launch a few more. We're never going to be one of those exchanges that launches sort of hundreds of coins, but I think, sort of 10, 20 coins would be a nice amount to have, especially if there's interest in them.
How do you guys decide which coins to sort of launch the derivatives on?
Interest, like market interest.
Yeah.
So I think when people ask them, obviously, like has to be a certain.
People like Imran there trying to how do I trade that?
It's funny because obviously I do the relative value between Ethereum and Bitcoin a lot, right? But now I've got all these other potential permutations of relative value trades to look at, right?
Yeah, it's a reminder to me, like I still feel like we're so early in this whole space, like, and Chantal, I know like you've been in the space for a while now, and like, so when you're in it and it's like dog years, like crypto is like dog years, like 1 year's like 7, and you kind of feel like we're quite sort of deep into it. But then when you think of someone like Deribit, which is like the biggest options exchange, have got Bitcoin ETH and now just starting to go out what I'd call like the risk curve into some of the alts. Like there's still like so much more we still need to build, and we are. I've said before, we're replicating the evolution of like the TradFi space in the digital asset space, but just on a much shorter time frame. So all the kind of products that we've seen and that you and I have traded over the years, and they're all coming to this space, and they'll start off with like the core Bitcoin, ETH, and then they kind of move out across the alts, and then like the complexity of the products, sort of will evolve as well. So yes, it's exciting and kind of seeing that happen. Just looking forward to what it brings, and obviously you're one to talk about like on the hedging side of things and the need to hedge, and derivatives is basically allowing, I think, institutions to play more in the space. because you need those hedge instruments, you know, there to be able to really kind of take them into a risk portfolio. So yeah, it's quite a significant step, I think, like seeing that progression.
Yeah, the point you make about having because a lot of these altcoins, right, a lot of people don't know whether they're going to be around in 2 years, right? Because that's the thing. So it's a lot safer to use optionality than outright. And you know, we talk about altcoin like returns using call options, but call options on alts are like squared, basically, right?
Yeah.
Altcoin returns squared.
Yeah, yeah.
So the potential is pretty huge. I mean, I imagine you'll get crazy amount of call option demand in these things, right?
Yeah, I think also at the moment, I mean, so we did actually, the plan was to launch them a couple of years ago. So I think we launched Sol 2 years ago, but it was the worst time to launch it. And that was inverse. Then everything started going wrong. And then actually we delisted it just as everything started to pick up again in Sol. So it was sort of back in, I think it was at the end of last year, we delisted it. And also to September last year. So I think, yeah, now's like a really good time. But I guess before it was going to be inverse. So we listed about 16 USDC linked perpetuals. And the plan was to launch options on those coins. But then because Terra Luna went down to zero, so I think it was more out of luck that we hadn't launched anything yet, you know, the way that you couldn't margin that. So I think we learned something from that. And that's why we decided to list them on USDC altcoins.
How are things sort of evolving, changing in terms of like the makeup of the client base on Deribit? Like I think of like the increasing use of options as a sign of like maturity, like within this market, and certainly like this institutional wave coming in. I'd expect the more institutions come in, then options and derivatives generally become a bigger and bigger sort of part of crypto. Are you seeing that? Are you seeing that sort of change in terms of the sort of proportion of institutions versus retail, and in terms of what the makeup of your flow and volumes and what have you?
Yeah, I mean, we've always been a very institutional-based exchange. So we've got hundreds of clients rather than thousands of clients. Because to trade options, you have to a certain extent know what you're doing. So I think last year, we actually had a really good year last year. So I think when everybody else was sort of not having a great time, like we were just, you know, options are still really underrepresented, as you guys know. So we were kind of steadily sort of growing, you know, in terms of number of contracts. That was obviously depending on what's happening with volatility. Like you know, our volumes are driven when essentially like the last 2 years something goes wrong, until now where it's quite nice to be sort of like sitting behind higher volumes with something good going on with the ETF. But we had sort of, you know, I think last year probably between sort of 30 and 50 corporate onboardings a month. And when I say corporate onboardings, it's not, you know, big institutional money necessarily like what a traditional fund would be, but it's not retail. And actually it's a lot of spin-offs from kind of options, prop firms, market makers. And more we're seeing more kind of like institutional, like big institutions entering the space. And I think that's the difference between us and one of the kind of newer exchanges that are trying to get into options. And the way that we're set up very much like an institutional exchange. So, you know, the majority of people at Deribit will come from traditional finance backgrounds. So we've set it up, you know, portfolio margining, multicast. We've just released like mass quotes.
What does that mean, mass quotes?
You can send like multiple quotes in one order, basically. So it's something that market makers have been asking for. It's something that you get on all traditional exchanges. But, you know, the other exchanges don't offer things like we're in LD4. So, you know, we offer, you know, a lot of people are kind of co-located in LD4 or cross-connect. We're in AWS as well, but we also have multicast in that. And that's something that the other exchanges don't offer.
And the Fireblocks thing, that's has that been something a lot of institutions have asked for custody, or? Yeah,
I mean, so again, we I think because we're more of a European exchange than some of the others, we actually have always had offered a number of custodians to keep your assets up. So we integrated with Copper 4 years ago. So nobody was using us custodians. None of the other exchanges that integrated, and we integrated with them. Nobody really used it. So obviously since this time last year, like a lot of the other exchanges have integrated with Copper. Kobo is an Asian one. We've also integrated with that about 3 years ago. And then Fireblocks has been the most recent one. And yeah, it's a lot of people are kind of, you know, because I think a lot of people use Fireblocks anyway. And actually in some cases, people don't want to have a custodian. They want to, you know, keep assets within their environment. And so essentially the Fireblocks off exchange settlement is essentially you can have your assets in your own Fireblocks wallet, and then you can trade on Deribit without your assets leaving your Fireblocks environment. And I think they promised that they'd have about sort of 50 clients that would be interested in this. And actually, we're probably seeing about that amount who've turned it on. It you know, had some initial kind of teething issues, but it's all live now. People are using it, and people seem to be liking what they're seeing.
And is it only institutions who would use Fireblocks, or can retail do that as well?
Yeah, anyone can use it.
So it's the idea is if you don't want to have your coins sitting on exchange, and those coins that you're using for collateral to trade options, and you want it off exchange, i.e. safer, then you have essentially got a solution for that, which is the integration with Fireblocks. Right?
Yeah, and Copper as well, and
Right.
Kobo. So Fireblocks says if you don't want to have a custodian, so it's self-custody, whereas Copper and Kobo are custodians. So essentially you're passing the risk from the exchange to the custodian with Fireblocks. It's you know, so that we can't go and buy penthouses and boats and whatever else we want to buy with your money.
I mean, it's funny how, because, you know, a large part of the crypto community is proper paranoid about this sort of stuff, and not your keys, not your coins, that whole phrase, right? I mean, when I got into crypto, I never got into crypto with so much of my net worth that I was ever going to be that concerned about that. And I think that's probably a lot of the ex-TradFi guys approached it from that perspective. But, you know, the way you guys navigated the Terra Luna collapse, it didn't look like it was too scary having your coins parked on Deribit, basically, right? That's kind of how I found. And your insurance fund has exploded since then as well, right? And you.
Yeah, I mean, the insurance fund, it's up at, I think I looked this morning, it's about 160 million. And that's on top. I think people forget that that's on top of sort of the locked initial margin that we've got on the exchange. So if you're looking at over 100 million, I mean, that's kind of what a CCP has got, right? So, you know, that I think this is something that we do need to start explaining to people, because, you know, we only touch it if something goes wrong. So obviously we've got everyone's sort of margin. We've already locked in there. So initial margin, variation margin, and the insurance fund doesn't get touched unless something goes wrong.
What would give me an example of something going wrong?
So someone going bankrupt.
Okay. So they can't meet their margin call, basically.
Yeah, exactly. And so we would liquidate them, but we actually make money we'll take some a fee from liquidations, and essentially the insurance fund is basically just if something goes wrong.
Okay, but that's the number of that fund. The size of that fund is huge. I mean, I seem to remember that fund being like 5 or 10 million, and now it's like 160 or something. Right?
Yeah, well, I mean, this time last year, because it's all in crypto. So this time last year, it was. Well, I mean, it was like a third of this. So it's really in the last, you know, since the start of the year, it's just exploded. So
it's funny though, because when FTX blew up, and there was a lot of like FUD pieces out there about, you know, that this is it, like this is going to put institutional adoption back like years in crypto, and I put out a piece kind of arguing the opposite, saying that it could actually accelerate like institutional adoption, because it will kind of accelerate the path towards having like the solutions, like sufficient like insurance in place, and the kind of like custody solutions, prime broker solutions. It would accelerate that, because the questions I used to get before around like this stuff from some of the more like TradFi institutions coming into the space is like, oh, you know, where do I trade, and what's the risks around that, and do I need like custodian, all these things. And I think after FTX, it was like, right, no, we're not going to touch things unless certain criteria are met. And now all the exchanges and what have you have kind of gone, right, we have to have the right levels of insurance in place. We have to have the like a custodial connectivity in place and all these things. And I think it's just accelerated it. That now people go, okay, now we're seeing something that we get more comfortable with, and we can actually engage with and sort of trade on. So I know I'm like the perma ball in this space, but I think it has like, it's like almost like creative destruction. So so thanks SBF really for helping us get to this point.
I think it's been a good year for building. I think, you know, when everything was a bit quieter, like all the exchanges were able to sort of sit back, and, you know, in terms of what we've achieved this year, like we've applied for our license first. We got the spot license at the end of last year.
Where's that?
haven't in Dubai, so it's Vara. So we haven't announced it yet because like spot is such a tiny amount of our business, but we should be getting the derivatives license soon. We've got SOC 2, which we got, I think, a couple of months ago. Just released our penetration test results, like showing that everything's completely fine. So we've just become a lot more transparent, proof of reserves as well, more custody integration. So I think it's just that growing up and becoming more transparent, like audited financials as well. And then, this year's...
You've got a question on that Dubai thing. So does that mean US people are going to be able to get involved yet? Because I've got loads of retail US people who want to trade crypto vol and they can't. Is that anywhere on the horizon or not really?
No, still like we don't allow trading from the States.
Okay,
no,
so they're going to have to stick
not.
to BITO or whatever it is.
Yeah.
Okay, fair enough. And then do you think generally, because obviously the institutions who trade with you, with all the ETFs, there's probably going to be options listed on the ETFs. There's all the CME liquidity that's been building, but you guys are still massively dominant. What, 80? Are you still 80% market share, or is it even higher than that? Probably higher.
Yes, I think last month it was 85% or 80%.
So are you concerned that that's going to diminish?
Phenomenal, isn't it?
It's amazing, yeah. But are you concerned that's going to diminish with all the ETFs and people wanting to trade options on the ETFs and the fact that maybe the US trading engine that it is, that starts to grow? Like, are you concerned by that at all?
Yeah, I mean, we're not really concerned. We don't really look at our market share number because I think if the market gets bigger, that's good for, the industry. And obviously maybe we have less of the pie, but we're making more money. So that's fine. So we kind of want CME to do well. We want the sort of Bybit, OKX, what we're seeing more, they've got a very big retail base. And what we're seeing is they're starting to activate some of these retail users and getting them to trade options. And so you'll notice that they have spikes at kind of weekends. So ours is very institutional, and then you'll see these spikes at weekends. But then, these retail people then kind of see, oh, what's this other exchange that has all the liquidity and options?
Yeah,
so
as much
they
tighter
come and trade on us. And yeah. So it's kind of good. And I think actually, like, interestingly, I think the CME have done so well on futures. But if you look at our sort of top 20, it's very different to kind of our top 20 clients. The futures is very similar to or the perps is very similar to what you see on the CME, but on options, it's still a very different user base. So I think until either they can try and persuade people to onboard with the CME, but that takes ages, or if some of those kind of traditional, I'm not going to name names, but you know who they all are, and all of those kind of people that are trading the futures and the perps and crypto, the traditional guys, their bread and butter is options. So as soon as they start trading options, like the CME are going to easily be able to switch them on. But at the moment, it's just a very different user base.
Okay, cool. All right, well, I think we should probably tell people what's going on in the market now. Yeah. I mentioned we made new all-time highs.
Yeah.
Obviously, we've got the perma crypto bull here. Dave Brickell.
Yeah.
What happens next?
More all-time highs, I guess. I really don't see what kind of slows us down or thwarts this move at the moment. Like we've spoken about, the flow dynamic is just massive, and we keep setting sort of new highs for inflows into the nines, into these new ETFs. I mean, there's still like some sizable outflows from Grayscale as well. So they at some point stop, and then I kind of think the net inflows are going to accelerate higher. You mentioned our friend Michael Saylor. He's just gone and bought $800 million worth. There's even there's what's his name, Bill Ackman now talking about crypto. Yeah. So it's kind of
even Trump's talking about crypto.
Talking about it. That actually is like pretty significant potentially, right? Because it looks like, whether we like it or not, he's probably going to be walking into the White House, and he's kind of clearly now more open to it. So yeah, I don't see what stops this flow dynamic right now, and obviously we're getting closer and closer to the halving. So that is just its own story. Is going to keep I think taking us higher. Meanwhile, and I think what is quite important, I think the macros actually, which was the headwinds, turned a little bit more supportive, at least at the margin. Like, we've had some softer data flow over the last couple of weeks. we went back to pricing in like 4 cuts for this year from 3. So we've just seen it, and it looks like the dollar kind of topped out, and dollar's been moving lower, which I actually think is really interesting. As to thinking around reasons why that might be. Again, I still think this debt dynamic in the US, which is increasingly unsustainable, is perhaps maybe having an impact there. So yeah, like carry on. I mean, just before we came in the studio, we had CPI, which was a touch stronger. It looked like yields were sort of spiking a little bit on the back of that. But we had Jay Powell in testimony last week, where he basically said like they're cutting rates. I think he described policy as being well into restrictive territory. So I think the market's kind of, which always like loves the bear story, has kind of been jumping on this. Data's stronger. They might even hike rates. I think there's someone put out a thing about them hiking rates. They're not hiking rates. The next move is a cut. I think Powell said as well, the data doesn't need to necessarily improve. It just needs to stay as it is for them to cut. So I kind of looked at today's print on the CPI and said, it's pretty much the same. Like, I think core inflation still ticked lower. It went from like 3.9 to 3.8%. So I think Powell's looking at that saying, yeah, we're in restrictive territory. Inflation is kind of, yes, it's become stickier, and this part is harder. But to get that lower, but I think it's sufficient for him to cut rates. So yeah, I think we've seen the dollar weaken, yields come off, and they look like they've peaked out. So that's actually now a bit of a tailwind to this other really strong story. The thing that that's maybe, which I'm seeing everyone getting a little bit bared up on, is this talk about the Bank of Japan. So that
I was going to ask you about that. Yeah.
Yeah, so they're set to hike rates maybe this month. Is it next week, I think?
Next week they're meeting, on Monday.
Or April. That feels like it's been well telegraphed now, and they're coming off of negative rates, kind of going against what everyone else is doing. The reason why Japan's so important, and particularly if they end yield curve control, is Japan is like the biggest foreign holder of US Treasuries, and they're actually the largest creditor nation to the world. So the idea being is when onshore yields start to go higher, then domestic Japanese investors will repatriate their investments, their foreign investments back home, which means selling treasuries, selling global bonds, selling global equities to bring the money back home to Japan, where they can now get higher yields. So that's like the big bear argument. All right, Japan are going to normalise.
So it's unanchoring of yields, basically.
Yeah. Right. So I've kind of looked at it and thought about it, and I've written about this like loads in the past. But I kind of think you've still got a pretty big yield differential with the US. Right, so I don't think if they sort of tweak it and go from minus 0.1 to 0,
exactly.
I don't think it's going to materially trigger this portfolio reallocation that could cause mayhem. I think it's quite telling that US yields have actually not really done anything since these stories come out. The other thing as well is we can't get out of this. Like we can't escape. Like someone needs to provide the liquidity, and someone needs to be buying the bonds. So the Bank of Japan, if they just stop buying bonds, Treasury market blows up, JGB market blows up, and then they're all back buying it in a way. So it's kind of, for me, it's like, right, who's gonna buy it? Bank of Japan have already said, right, we're going to end yield curve control, but we're going to pre-announce, the number of bonds we're going to buy, and it just feels like it's all the same thing. Because they want to stop yield spiking, so it's kind of like, well, you are going to do some form of yield curve control. So I kind of don't see the big bear story there, but I'm watching it. The other thing is, and sorry, this would be the final sort of thing on this, but I do think it's quite interesting. Is I spoke last week about the Fed's Waller comments about basically rebalancing the Fed's Treasury holdings to buying more short date securities, which should be a way of kind of funding this deficit. There's now talk about amending the SLO, the supplementary leverage ratio, which is basically the amount of capital that banks have to hold against their assets. And they're talking about permanently excluding treasuries from that. So what that means is banks can hold as many treasuries as they like, and they don't have to hold capital and against that. So it's less balance sheet intensive. So essentially what they're doing, they're trying to encourage, again, banks to start buying up all the treasuries. So it says to me that this deficit issue that we've got, the Treasury, the Fed, they're all trying to work out how we're going to fund this thing. Biden's just come out with a new budget that he wants to $7.3 trillion. Like I really think I said to you in a message, like the lunatics have left the asylum and they're running US government. And like the more I read that stuff, the more bullish I get on Bitcoin.
Yeah, because it's the debasement trade, right?
It's the debasement trade.
This is every time I speak to anyone who's not in crypto already, and they're like, oh, we can't buy Bitcoin now, can we? It's too much. I was like, once you understand what fiat currency debasement means, you know that it can only ultimately go one way, right?
Yep.
Yes, it'll be volatile. Yes, it'll have flushouts. And I wanted to speak about the flushout last week, actually, right? But the point is, if you understand that every single government has gone too far in terms of their debt, and we're in the tens of trillions and we're never coming back, then there's only one way that we're going to go, and that's devalue money, and Bitcoin will go higher in price. And each dollar that Bitcoin's worth is going to be worth less, but the price of Bitcoin is going up, and it protects you from that fiat currency debasement. But yeah, the flush out last week.
Yeah.
So there's been a lot of leverage, and you know, Chantal can jump in on this as well, with the futures funding rates all exploding and stuff like that. And we had this little liquidation flush out, but it got bought back so quickly.
Yeah.
It was insane. So do we see fragility there of more of these little air pockets, because funding rates are still on the moon? But if you've got a hedge in place because you think funding rates are high, if you blink, you miss the correction, right? It's very hard to monetize your protection.
Yeah, I mean, funding rates are high. You're seeing that on Deribit, right? But that's only a problem if and I say that they've normalised quite a bit, but it's only a problem if Bitcoin isn't moving, and then those funding rates become, well, they'll feel very costly if Bitcoin doesn't go anywhere. But right now, obviously, we are getting the moves. I actually think I love the price action that I'm seeing, and as someone who's spent years like kind of watching price action, it just looks really healthy. So we have these moves up towards, like, we tag like these record highs. Then I think there is some like selling, like we've seen some like old wallets sort of move, and some sort of profit taking from some whales and stuff. So that's kind of like natural. You're going to get that, and then it kind of feels that then the shorts all kind of pile in. So we hit these levels, then like it gets given, maybe some profit taking, and then people like want to pile in short and try and short the market. In the meantime, you've just got this consistent wave of what I call real buying through the ETFs that keeps coming through, and the Michael Saylors of the world, and it keeps coming through, and then all of a sudden, like, so people try and sell into it, and then I actually called it. It's like we're creating this pseudo like short gamma positions constantly, because everyone's got short at the highs, trying to call it, and then the real kind of flow comes in and it squeezes everyone out, and then we accelerate to the next level. So like I think we keep seeing that. So the real buying is there, and it's going to be persistent until the inflows into the ETF stop. People keep trying to short it and keep trying to call the top, creates this pseudo like negative gamma effect, and then we accelerate. So I mean,
but do we have a load of institutions coming in to do the ARB, the funding ARB, where you can earn 20-30% annualized on selling futures and owning spot? Surely that's a no-brainer, isn't it, for them?
Yeah, I mean, our perpetuals, like our futures and perpetuals, did really well last month. So a lot of people were coming in and buying those. I mean, open interest overall is like all-time high. So we're well over 40 billion. There's like 25 billion in BTC. 12, 13 in ETH, and then like 4 billion on the future side as well. So yeah, it's like highest ever.
So what do you think, what percentage of the open interest is coming from those sort of RB type trades, and what percentage is actually people expressing a proper view on the market?
Well, on the future side, I mean, we don't have. I mean, we're not like as big as other exchanges on like the future side. So we're only like, our open interest is only kind of 4 billion. So if you think about it, we're about 65% of our volume is options, 45% of perps. We're like 85% of the options market and 3% of the futures and perps market. So it's it's not as represented, and so it's mainly used sort of hedging and.
So the futures arbing could be done on any exchange, and is probably being done all over the place, not just at Deribit.
Yeah, not just at Deribit, but also like we go a whole year out, so which I think other exchanges don't do that. So we go further out on the future side.
Okay. And are the funding rates are the annualized funding rates quite consistent, or?
No, they've been going up and down, yeah.
But I'm saying, do they, as you go further out the curve, do they go up, or do they? Where is like the juice basically? Is it in the absolute front end, or is it in the back end?
A bit of both. So the 3 months. I think March was like very, very high last week. The 9 month was. I think last week it was about 20%. And
for the 9 month?
For the for the 3 months.
Oh, okay.
And then it was lower for the 9 months.
Oh, okay.
But the thing is, I kind of think you've got like retailers go like just lever themselves up and buy the perps and what have you. And then you got like the market neutral guys will come in and they're gonna try and arb that away and then just lock in the funding and play the basis trade and all that sort of stuff, which is kind of net like neutral on the market. But like when people were saying to me, like talk about levels of open interest and stuff, if you actually look at certainly when you look within like the world of perps and stuff, compared to like the market cap, we're still not at extreme levels. Like it's not extreme. So I'm not looking at this world going, yeah, like leverage is like we're so juiced up on this stuff. It feels still like all quite orderly. And again, if you look in, and particularly when you think about retail, we spoke. Oh, by the way, since our conversation last week on the Memecoins, I got hammered for that on Twitter about saying I don't really buy Memecoins. But then someone, the Mutai community, like all sort of pounced on it, and someone sent me some Mutai. So now
well, you got some free Memecoins.
Yeah.
Where are mine? Where are my free Memecoins?
As well, and thanks to they know who it is who sent it to me. It doubled as well within like a week. Yeah. But yeah, no, which I thought was quite funny. But obviously, like retail getting like more active in this space, but still, again, you look at Google searches and all those sorts of things like ticking up. But we are not at extreme like bull market levels like at all. And it feels it because of price, and we've hit record highs before the halving and all that. But this is why I'm still so bullish. It still feels like it doesn't feel that like frothiness that I would get necessarily concerned. And again, I've said to you, I'm conscious that like I could end up looking stupid because at some point you think we're going to have a really decent correction, and I understand like absolutely like get your hedges in place and get your risk reversals on and all that sort of stuff. But yeah, right now I don't see what stops this dynamic, and with the macro turning more supportive for it, I do think we're going to continue to set sort of weekly new highs. And I kind of feel we will maybe see 100k before the halving. So,
yeah, well, that was the call you made last week. But we did start to see some hedging activity in Ethereum this week. Not so much on Bitcoin, but Ethereum touched that 4,000 level, and we saw quite a dramatic move in skew. Have a look what I saw in Vol this week.
Okay, jumping into what I saw in Vol this week. BTC realized off its highs, which you can see here, finishing down in the low 80s. We had that massive 6% drop this time last week, but quick recovery, has steadily been increasing, and we saw a nice little breakout to new all-time highs yesterday with about a 4% rally. So all in all, hanging in there on realized and continuing to make new highs. Outside of that, Ethereum has actually been realizing more. So you can see here, Ethereum sitting pretty much near the highs in realized. We've got around 90 realized vol here. We saw a huge move, 7% on the 6th. And then we saw another nice near 5% move yesterday, above 4,000 for the first time in a long time. Obviously, the all-time highs on ETH not quite being achieved yet. They're another 20% away. But the way these crypto markets are moving, don't be overly surprised if that does happen soon enough. All right, so that's what's realized vol. Now, if we look at the flows, Ethereum flows are really the big ones that are having a lot of market impact, in my opinion. Quite chunky call spreads being bought. So we saw a little bit of profit taking on some short-dated calls. You can see that in here in these pink bars. and some fresh buying as well. But in general, two-way flow in the short dated calls. But what we are seeing is chunky buyers of call spreads. So I've got two call spreads here. The 3600, 4600 call spread, which is this strike versus this one. And then we've got the 4,000, 5,000 call spread, which is this strike versus this one. But essentially what it means is clients are selling these strikes up top, the 4,600 and the 5,000. Those are upside strikes. The strikes that people are buying are the 36, which is now way in the money, and the 4,000. So that is essentially a skew trade because the clients are buying this area and they're selling this area. And what does that do? That makes call skew go lower because dealers are being supplied with those upsides, so they want to take the price of those down, basically. Okay. And then just to make skew move even more in that way, we saw some put buying demand come through as there was some risk on the idea that the ETF approval for ETH would be delayed. We also have the Denken upgrade, which I don't know how much risk that really brings to ETH, but the idea is we reach the 4,000 target. If we're going to get a pullback, we could easily get one in the near term. And as usual, people are using short-dated March puts to hedge for that scenario. All right, in terms of the way that has impacted the term structure, you can see ETH, it's a similar move on Bitcoin, but highlighting ETH because it had the bigger move, we are really seeing a shift higher more in the middle to back end of the curve by about 6 to 7 vol points, whereas in the front, not moving quite as much and already quite elevated. If we look at where it used to trade in the 40s, that is quite a massive increase that we have seen in front-end crypto vol over the last month or so. So that's what we're generally just seeing a shift higher led by the back. Okay, and then closing it out, crypto skew. I thought this chart was worth flagging. So as I said, call skew coming down, but it's been very dramatic in Ethereum. So whilst you've seen Bitcoin call skew go from 7 back down to 4, which is the green line, this is on the 1 month expiry. You've seen Ethereum go from similar to flip into put premium of around 2 or 3 volts. So not only have the calls been annihilated, you've actually got put demand come in and take it into a put premium. So when you see such dramatic repricing of skew, and that's with the market actually still sitting near the highs, that should make you pay attention. It should make you realize that there's players in the options market who are trading decent size and spending real cash and moving option prices in a way to hedge themselves because they see some serious risk on the short-term horizon. And when I see that, I pay attention and I take notice. And hopefully you guys are going to learn to do that along with me. All right, that's what I'm seeing this week in crypto ball.
Okay, so that's what I saw. What do you make of that?
Yeah, interesting. Interesting that ETH is starting to kind of feature more. I mean, for quite a while, it was all the action, right, was in Bitcoin and Bitcoin Bowl and what was going on there. Should I be getting scared then? Yeah.
I mean, I'd like to say I made a pretty convincing case in there that those option flows are normally some sort of short-term signal. Yeah. Which is why, I always run it with some sort of hedge ratio on my holding. So I have whatever I have on Deribit, and then I might hedge none of it. I might hedge all of it. I'm kind of scaling that around based on my tactical views. Right now, I'd say we did hit a big target at 4,000 on ETH, right? And we have started to see some of those big call option buyers from the last couple of months take profit on that. And they're rolling up, but they're rolling up in call spreads, which in itself is a less bullish trade, right? They're saying we don't want to pay up for the expensive vol. We want to maintain our upside, but we're happy to cap the call and do a call spread because we don't necessarily think it goes there that quickly, right? So that in itself, that type of flow is telling you that those players are less bullish than they were. And then you've also got this ETF thing where people saying that it doesn't look like it's on track to be done by May now. So does that mean there's a bit of a wobble where people get a bit nervous as to whether it actually happens or not? I don't know. But these are little things that are setting up for a pullback. But like you say, generally buying it, any dip you get, you probably want to be in a position to buy it. But what hedges allow you to do is give you that position to buy it, right? And either through monetization or through adding more money when the dip comes.
No, it's interesting. I mean, again, like the kind of flip side to that, I guess, is that, it's relatively cheap to start buying upside. So that the sort of bullish side of me kind of
put versus call. When the call skew's flattened and gone, it's saying that the relative pricing between calls and puts agreed has come down. but the absolute level of call vol
Yeah.
is as high as we've seen it in ages, right?
Yeah,
So, yeah.
Um,
I know you're going to try and spin it into a bullish argument.
I'm just wondering whether we should be selling the puts and using that.
At some point, you definitely want to do that. But that's why at the highs of the market, you want to have some hedges in place so that if a dip comes, you are then in a position that you can sell those puts.
Yeah,
Right.
yeah, and it's going to be interesting with the ETH ETF. I still I still think it's nailed on to get done. I don't know if you saw Gensler on TV last week talking about it, and he defaulted to the telling you how risky like crypto is, and ETH's another, it's he was described it as a roller coaster, and he's like really kind of aggravating way that he does. But he's talking about the risks around it rather than as and he started doing that with Bitcoin, if you remember, when he was like we've given up on the fight against it. We just want you to know that it's really risky.
I see. Yeah.
And I kind of just picked up on that.
It's like a disclaimer.
Yeah.
It's like saying, we're going to allow you to trade this, but we're
Yeah.
giving you a
Yeah.
disclaimer that it's risky, right?
Yeah. So
That's interesting.
yeah. So but then at the same time, and it's interesting that it feels like the ETH options market is kind of expressing some doubt around like the chance of this getting through now.
Well, there's just a bit of fatigue from the rally,
Yeah,
right? I
yeah.
mean, we've gone up practically in a straight line from 2000,
Yeah.
but we've doubled,
Yeah.
right, on ETH. So, I think whilst I'm very much a long-term bull, as I said, the whole fiat debasement story, generally things don't move in straight lines, right? Now, in this case, they are moving in a straight line, and I think it's because people are front-loading all of the now that the ETF's been approved in Bitcoin, any institutions that are trying to get their clients into it are front-loading it now before the halving, right?
Yeah.
That seems to be what's driving that flow, right? But, so there will be corrections. It's an 80 vol asset. You've got to expect some corrections and some pullbacks, right?
Yeah, well, certainly the options guys are certain positioning for that, I guess.
Yeah, seems to be. But like I say, I think the switch trade that I've been talking about, call switches and stuff, is not worth having it on anymore. So I actually unwound some of my switches where I had long ETH calls and short Bitcoin calls because ETH had a nice rally last week into Friday. I took advantage of that to just get out of those positions because I actually do think that it's just becoming a very volatile spread. So the whole point of trading spreads is that you're trying to reduce the volatility of your position, and then you capture money through the alpha, which is the outperformance you get of your long leg, right? But when you've got a spread like ETH Bitcoin going crazy like this and not really breaking out in either direction, there's not really any additional alpha in owning that spread. So I'd rather just own a bit of ETH and a bit of Bitcoin and just make sure they're partially hedged, but just have them both, because I wouldn't be surprised if the next leg higher is still led by Bitcoin because of those ETF inflows.
Yeah.
All right, well, we should probably close it out. Anything you want to leave us with, Chantal? It's been a pleasure having you here. Anything you want to leave us with?
No, just we've had record days. Like last week, we had sort of $3 billion notional days. So really exciting. Obviously, having the ETF, like massive inflows coming in, seeing like massive trading volumes. And I think last year we had 3 billion notional traded a day. And I reckon if things carry on this month, it's going to be very interesting to see what we see at the end of the month. So yeah, cool. Very exciting. Thanks for having me.
Oh, it's a pleasure. All right, that's it. So, I mean, if you haven't heard of Deribit yet, you need to check it out, basically. Okay? I mean, I've been trading since 2020 on Deribit, and I'm not that bothered about what stocks do anymore because all the fun and excitement is in crypto. So if you want to trade vol, you want to trade vol in the most volatile asset class, and there is none other than crypto. We'll see you all next week.